Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 902. So you can see this is on stock symbol CE. It was a long call in our impulse or directionally based strategy. The entry was sent out on November 22nd. Pretty interesting when you take a look at the chart. First thing you notice is a whole bunch of these little gaps everywhere. First, make you think that perhaps it's an ADR trading on the U.S. exchange, because those stocks tend to look like that. But this actually is a company based in Texas, and they're over 100 years old. So unusual chart formation, but the big zigzag, as you can see. Now, looking at this chart, kind of interesting. Talk about a zigzag example. Zigging and zagging all over the place, and if I drew every one of these zigzags in here, it would be a mess of a chart. So I've left them off, but I think you can visualize and see as it moved up in an extremely complex A wave. Then we moved down to the B wave correction right at the 61.8% retracement level. One zigzag right here on the way down, so close to a mono wave, but technically still complex. And then as we move up in the C wave, we are also within a wave 3. So this is my favorite directional pattern, when you have a zigzag within an Elliott wave 3 of a 5-wave impulse pattern. Here also one quick pullback, so one zigzag in here. We're at the 61.8% extension on the C wave, moving to the upside here with a target of around 142. So that was the entry. Now, as you can see on the exit, we closed this just 7 days later, and when you take a look at the chart, you'll see, well, you didn't hit the extension target. This is a question that comes up a lot. Why did you close the position out before you hit your price target? Well, look at that dot there. It was a big gap up, and with that, a little bit more of a gap than usual here, but a big gap up and pretty decent separation here from the 10-day moving average. So we are overbought short term here, and when you get these kind of gaps, you get a little bit of an IV rush into the call options as well. So if the stock is to go sideways a bit and then move higher, you could actually have less value in your call options, even with the stock price higher, than if you take the gain when you have a gap up like this. So we made the decision, let's go ahead and take the profit. I think earning nearly 56% in a week, most people would take that. So pretty interesting example in this trade review. Hope you found it informative, and look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.